Good morning, traders. Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 8:52 a.m. Eastern Time on Thursday, October 15, 2020. So real quick, let's just look at, where we've been, where we've gone. We'll zoom into this level a little bit. But basically, still unable to get over these all-time highs previously, right? With all that's going on, no big deal, no big surprise. So as we look to see what's going on now, we can see that, after we had our shot up from last week, and we'll go over that in just a second, looking at where we're going to open right now, right? The bottom of this red candle, where it is right now, would be the opening print, right? And there's going to be a void above us. So obviously we could get some type of reflex retracement back up, or we could start sketching down just as we sketched up. But I have a feeling the market wants to retest at least right around 33.94 half, the top of this node, to basically 33.75. So 33.75 to 33.95 is, I think, what the market needs to see before it has any conviction of going higher. You can see where these bodies of the candle kind of line up right around this 33.95 as well. So that'd be a nice place. We haven't spent too much time above that level, relatively speaking. So again, as you look at that shot, right, you turn off the extended hour, much different view, right? We have a streaky action going up there and just coming back down here and closing that off and retesting that area. It makes perfect sense if we're going to stay in our bullish trend. I'm not so sure that that's what we're going to do, but time will tell. So this was our stimulus off the table from the White House. Maybe I'll go back to the negotiating table, but what this fails to capture really is the Senate has no intentions of negotiating, right? The Senate is at $300 billion, 650 minus 350 that they're going to pull from other places, leaving a package of $300 billion. Now they're talking about even having a smaller package than that. The White House is at 1.9 trillion now, and the Democrats are at 2.2 trillion. So it's the Senate that people should be worrying about, not the White House and the House of Representatives, to see if a package can pass or not. But with that said, I don't think that this move really had to do with stimulus, because everyone that really knows what's going on knew the Senate wasn't going along with either case, right? So this has to do more with just regular market activity and what's going on. Don't let the narrators of the financial channels, right? They see price movement, they think there has to be some narration involved with it. Obviously, this was tied to President Trump's tweet on the way down. But it was just algos looking for a place to sell it, and there was no one to stop them for doing it, right? It was market manipulation tied to that event, right? Because no one could stop it, and it was a very quick pace down. So as we look at the 4 trader pivots, we have some areas under us that we could get repaired today. Really, we could get down close to 33.85, and that's the area that I think the market wants to really retest anyways. So we'll see if we can get down there today, and then starting tomorrow will be the bigger deal, the tell, right? So when you're trending down, I posted this in my equity profiles chat last night. When you're trending, right, you pass underneath a support resistance line, you come back up and you check it, and it's now resistance. When you're bullish, you pass above a support resistance line, you come back and check it, and you hold it, right? So those patterns are just the mirror opposites of each other. So looking at all the indexes and really where we could get to today, you got basically 1547.60, and I'm not looking for the extremes, by the way, but you have to be aware these are on the table. 1547.60, 11,363.75, 33.65 half for the ES, and 27.606 for the Dow, right? So right now I have some basic support resistance lines on the ES. You can see that we're just coming down. So let me be perfectly clear. Coming down and hitting a support line as you're falling and responding off of it that's not bullish, right? You have to pass above previously failed lines and then hold those, right? These are just places that people that have got short, right? Because no one has the vision, or very few people have the gumption or the vision or the balls, however you want to look at it, to hold for bigger targets, right? So they take these smaller targets off as they trade, right? They're not looking for a bigger play. They misread the opportunity that's on the table. And then you could trail the stops down in a bigger way if you can swing your positions. Some people can't swing their positions day over day. So as we look at really the Nasdaq here, I'm going to make this quick, but you can see we lost the 11,927. We're down immediately, right? We flushed last night to 11,727. Because it stopped here, let me say this again, it's not bullish. You have to cross above the line above and then hold it. That would be 11,927 at this point in time. So once this fails, we're likely to test near 11,580. And then you would have to cross back above 11,727 and hold it before you would even think about taking a long trade. Like if you want to do a quick scalp, right? If you think that, hey, I'm going to buy here, I missed the drop, I'm going to buy it up. You can do that, but you better trail it pretty aggressively and pretty tightly, right? That's not the trade. The trade is to look for the next short entry until the market tells you that that's not the way to be trading. And it could be when the ES hits like right around that 33.85 plus or minus 20. So I hope this helps. I'm going to cut it there, and you guys have a great day, and I'll talk to you tomorrow.